Hello, thank you for joining me as we go into this brand contribution program. This is a guide by BRIODS Corporation of America. My name is Avidon M. Respes, and I'm going to be the one that's, obviously taking you through this. So I'm very excited to be sharing this information with you because back in 2013, Bloomberg stated that the creative economy employed nearly 30 million people worldwide and generated $2.25 trillion in revenue, or about 3% of the world's GDP back in 2013. So why is that important? That is important because the GDP is the gross domestic product, which is a monetary measurement of the market value of all the final goods and services produced, in a specific time period, from a specific country of origin. So America has a GDP, China has a GDP, Italy has a GDP, Germany, Britain, all these different countries have a GDP, which states how valuable that country is economically. So when you look at the creative economy, that says major, because if the world has a complete GDP, right, in this industry alone is 3% of that, it's incredible. Imagine how much you could benefit just from getting a little slice or a little portion of this $2.25 trillion, which is set to rise, right? You have the opportunity to take this to, extreme heights, with people understanding how they can make more money through their creativity, through their artistry, and while creating these personal brands. This number is going to reach 5, 10, 15, 30 trillion dollars within the next, 10, 15, 20 years. So with that being said, you could have a nice little portion of this major scaled revenue. So before we really get into this, I just want to, give you the disclosure, because not everybody is suitable for this. You have to understand that investing is risky. By the time we get to the end of this, you're going to understand what investment I'm talking about. So when we get to the end, if you have to come back and refer to this, remember I said that if you are unable or unwilling to endure the possibility of loss of capital, this is not for you, okay? This is not for you if you cannot take a loss, okay? We take our L's, we turn them into W's, okay? And through the different assets that our organization and through the system that we use, we're able to, mitigate a lot of the risk and have, minuscule losses, so that at the end of the day, profit revenues are, very, very exciting. So let's really look at this, because a lot of people have desires, okay? Bigger house, nicer car, world travel, debts paid, this list goes on. Maybe there's some things that you desire, that you want, that you have in your heart that's on this list. Maybe not. But the question is, does your income, right, equal out to the desires that you have? Most often, people are going to say no. What we've realized, at BRIODS Corporation of America, we understood that there's a problem, right? Lack of product, lack of support, and lack of environment, right? If you do not have a product, you're not going to be able to create revenue, right? You can go to work, you can work for somebody, of course, and make money that way, but by you having a product, you're able to leverage that and you can make even more money. And then once you get support for that product, right, you can scale that, right? And then once you actually create an environment for that product, right, a brick and mortar store or a digital store, something of that nature that people can come to, and it's very easy access, right? That environment and people sharing and talking about it, like all that makes it real simple. So the problem is most people don't have that. The 45-year plan, which is what most people get stuck in. And when I saw this, I was like, whoa, I got to do something different, because I saw myself living this. And I didn't want to end up, right, where the 45-year plan is going to take most people, which is you start working at 18 to 20 years old, right? You have these inclines with your income. it, gradually increases. Maybe you got to change your job, a few times, maybe multiple times. You got to change your job in order to get, this higher income to be able to, create the type of lifestyle that you're looking for, right? Going back to those desires, right? You have to find a career that is going to pay for those things. So as you're able to, grow on this, 45-year plan, eventually your income plateaus, because eventually people aren't going to pay you, right? They're not going to want to pay you more. Your boss is not going to want to pay you more than what they're making, okay? And the organization is not going to pay you more than they feel like paying you or what the market says that you're worth. So eventually your income hits a plateau where your raises barely keep up with inflation, right? Life already starts to get tough. And let's not talk about if you have still debts, credit card debt, school debt, now you want to send your kids to school and all those different things. Maybe you have a pet and you got to take the pet to the veterinarian, and you have all these obligations and all the stuff that you pay for now after your income plateaus, that once you hit that retirement and your income drops to a third of what you're earning, right? When you hit 65, right? That's when everybody wants to kick their feet up. Now, retirement is looking more like 70, 75, never, right? It's getting pretty crazy because at the end of the day, life is getting so expensive that people cannot afford to retire. So imagine after you have all this lifestyle, right? You got all these goals and dreams that you're trying to pay for, and now you got to retire and live off of a third of the income that you're making. How do you expect to do that? So that's a major problem. And this is what most people are living in. So when it comes into looking at the demographic for minimum wage, right? $25,000 is what the minimum wage is about. And a $500 investment is like 2% of that, which you could say that's kind of, substantial, right? When we look at the GDP, being 3% from the creative industry, right? So this one investment can do a lot. And the potential returns are 1,500, which is 6%. So if you're in the minimum wage, bracket, this is doing pretty good if you invest 500 and get 1,500 back. In my area, which is, Sicklerville, the 5-mile radius, which is about 107,000 people, the median salary is $97,000, which a lot of people will say that's pretty good money, which it's okay. $500 investment is 0.5%, like a little bit over 0.5% of that income, which doesn't really matter too much to that individual. Why? Because this isn't really too much of a burden depending on how they're, spending their money. If they're spending their money wisely, right? If they're also investing, which they should, this $500 investment with the potential returns of $1,500, right, is great because they're giving a little over 0.5% and getting back 1.5%. So that's very, very exciting. We want to look at this because going back to that 45-year plan, most people are stuck right here, which is the cash flow quadrant and how people make money. When you look at this red triangle, right, which is employee, that's the 45-year plan. Most people try to get out of the 45-year plan by becoming self-employed or starting a business. But most often, right, when you look at this and it says self-employed or business owner, what's the difference? The difference is this self-employed person does not typically have a system behind their business to make the operational functions easier so that they don't have to be there, right? This self-employed person still has to be there. So it's like they own a job. They're still trading time for money, where once they get into this B-type business owner or this systematic business owner, right, the system works for them. People work for them. So at the end of the day and at the beginning of the day, somebody else is picking up the phone, right? Let's talk about a plumber, because a lot of people are in this type of trade, a plumber, electrician, carpenter, different things like that, right? A general contractor. You're basically self-employed, right? So you own that job, you own that business, and you have to show up. And if a pipe bursts or if there's a problem after hours, most likely you're going to have to show up. Whereas if there's a system, you're not the one that has to show up. somebody else shows up for you and you take a percentage, you guys share a percentage, right, of the income, right? Because you hold a percentage, you hold the liability as the business owner. You hold all the liability, insurances, the brick and mortar business, all this stuff, the truck, the tools, everything. That whatever you decide to take, ownership and management of, that's what you're putting into the system, that somebody else is working and taking a percentage of the income also to be there while you're not. So once you get that system working for you, then you move into this investor or this passive income type of quadrant where your money is working for you, right? This is a perfect life scenario where you go from an employee to being self-employed. You develop a system, right? You become a big business owner. You hire people. You manage people. You have all these things operating for you, and that income that you generate, that revenue that you generate from being a business owner, you put that into your investments and you allow that money to work for you. So when we go back and talk about products, right, this is the chasm, or also what is known as the product life cycle. So most often this has to deal with technology, new products coming into the tech sector and really influencing the market. So but it works for everything. And why? Because at first it's going to hit the enthusiasts, right? Or the innovators, the people that can see that you came up with something innovative. It's new. It's something that sparks interest, right? It doesn't really have all the fine tuning details behind it always, but there's something behind this that innovators will be like, you know what? This is innovative. It's cool. It's new. I like it. I'm going to support it. So once you get a decent amount of this 2.5%, right? Once you have control of this 2.5%, the innovators, right? The enthusiasts, then the visionaries start to pay attention to what you're doing. They're the people that are like, you know what? I see the vision behind this. This is going to be something, right? These are the early adopters that are like, you know what? I better invest into this before somebody else does. Okay. So are you, right? Because I'm going to go into more of this. Are you an innovator or are you a visionary, right? Or you may be a pragmatist, because the pragmatists, right, what they do is after the visionaries put their sauce onto everything that the business and the innovators have been doing, right? They come up with a system, right? It starts to be operational. It starts to work like a well-oiled machine. The pragmatists are like, you know what? This works, right? They don't care that it's new. They don't care that it's innovative. They don't care that there's a whole vision and a whole scheme and idea behind it. They want to make sure that it works, right? So as long as it works, that's when the early majority is going to support what you do, and that's when you know you're through the chasm, and that's when the mainstream market really supports you. But you have to first get the innovators and the early adopters, which is the initial 16% of the market. Once you have a market share of the 16% of the market, you're able to break into the chasm and then dominate 50% of the market, which is the 16% with the innovators, the early adopters, and then the early majority. Then after you get them, the conservatives will follow through. Once they see that the pragmatists are like, yeah, this is working, and everybody knows that it's working. The conservatives were like, you know what? No, I love what I'm doing already. I'll never try that. I don't really want to do anything new, this or that. They're like, you know what? I like this thing. It's not new anymore. It's gone through, all the different trials and tribulations, and it stood the test of time a little bit. So now I can support this. So now the late majority, right, supports your product. They, become a part of your system, and then eventually, which nobody really cares, but the skeptics and the laggards become a part, and they do or they don't. But once you have 84% of this market, you're doing pretty good. So as we show here, which is what we do with social media, we've been able to break through various chasms, right? We've been able to break through and, get in touch with deeper parts of the market share that will influence us to achieve the results that we're looking for. Why this is important, because we found out, right? And you can go check this out online. We didn't find it out ourselves, but we put it into, actual application and action. And we saw that once you get 1,000 followers paying $25, you'll make $25,000. You could do that in a day. You could do that in a month. You could do that in a year. But the goal, right? The goal in starting fresh is always to reach this 1,000 follower mark, right? Start with 100, grow to 250, grow to 500, hit that 1,000, and make $25,000 a month. Okay, this is how we break our income strategy down, right? Once we hit our revenue goals, this is how we're breaking it down as far as where the money comes from. There's businesses and brands, real estate rentals, education, economics, subscriptions and streaming, management, and merchandising. We work in each one of these different avenues, and that brings us not just active income, but also passive income that we could benefit and we could also share with you. That's what this whole opportunity and presentation is for, so that you can understand that once these revenues are, generating and, in a very well-oiled manner, because when we start new businesses, right, it takes time. When we go into new ventures, it takes time for it to stabilize, right? It's not an overnight thing. This is not an overnight get rich quick type of thing. This is a well-oiled machine, and we make sure that the system in place is actually working so that the revenues can come out how they need to. So BRIODS takes a percent. When we start a new business with a brand owner, they get their percent. The contributors or the quote unquote investors, right? Legally, I can't call you investors because of all this different fine print and stuff. So you're contributors. You're contributing into a system that you're getting revenue and profits from. We also have to pay the sales and marketing team commissions for going out and distributing these different businesses and the products and services that they have. Your estimated revenue for the year is a portion of what the group is sharing, right? You're going into a pool, and I'm about to explain that. You're going into a pool of investors or contributors, right? Because you're not investors, you're contributors. You're going into a pool of contributors that are putting their money, right, together. We're pooling the money together and creating other brands and other opportunities and buying assets. You're not holding ownership of the assets. You do not control the business. We do at BRIODS Corporation of America. But what you do have access to is portions of that revenue, okay? So what happens is you put your $500 in. There's a group that we put you in. You don't have to make the group. You don't have to go get people or nothing unless you want to. You get, kickbacks because of that, referrals, but you don't have to. So you bring your 500, we put you into a group, and all the money is syndicated into a portfolio that is then, waiting for a 12-month stabilization period. Because like I said, when we start a new brand, when we go into a new asset, like what you see here, if we go invest into 5 homes, we're going to wait 12 months to make sure that the homes are generating income how they need to, whether we buy and sell, whether we are renting them out, or whether we're, flipping them. Either way, we're making sure that the revenue is being generated properly. Then the returns are paid out, okay? To go into this a little bit more in depth, because you need to know that the money goes into a portfolio, okay? I'm very excited because not a lot of organizations offer this, but through our leverage systems, right? You put your money in, right? You take your $500, it's syndicated into a group portfolio, right? We're pooling group economics, right? That's what we're doing. We're using group economics to pool people's money together, right? And to invest into assets, right? That's what's going to cause the money to have a 12-month stabilization period into these assets. So you got to wait at least 12 months, right? This is real life, okay? This isn't get rich quick. So we're not saying, oh, you're going to put your money in, get your money in a couple hours. That's not what this does, okay? So this is a type of set it and forget it type of thing, okay? You put your money in, the money works, right? 12-month stabilization period at least, okay? Then the returns are paid to the group in a first come, first serve basis, okay? So however you are on the line, right? If we do this and we sign up, 10 people in one day, however you are in that line of signing up, if you sign up before Billy, but after Trisha, right? Trisha's going to get paid. You're going to get paid. Billy's going to get paid, right? Once you get paid, your return. We suggest you put your money back in, right? Back into the recirculation. But if you want to feel secure, you take your $500 that you started with, okay? That way you don't have any losses. You take your $500 back and you use your profits to put back into the funnel system. You recirculate that money so that you can make more money on the back end, because we're going to do this again. This isn't the first and the only time we're going to do this, right? Because there's other assets, there's other opportunities that we're going to invest into and that we're going to give you the opportunity to invest into as well. So once you put your money in, it circulates, you get your money back, first come, first serve basis, right? Recirculate that. This is sort of how it's going to look, right? If you put your $500 in to be safe, you're looking at 2 years to get your $1,500, right? It's not a lot of time to get 73% back on your money, okay? And the reason why that takes time to gain 1,500 is because we're making sure everything works properly. And we're not going to pay you out everything at one time. That's not how this works. And it's all written down in the contractual agreement that we're going to share with you when you become a part of this. But this is how the returns are scaled out. It's important also for you to understand that anyone can do this alone, okay? But it's best to piggyback on an established system to cut through the early stages of development. Key information is readily available on a 24/7 basis, and contact can be established via the BRIODS Corporation of America site, email, or contact number as stated. Requests for information will be serviced on a first come, first served basis. In conclusion, our number one rule is to view each contribution as a private donation to support your goals and dreams as assisted by a BRIODS team member for the common goal of success and fulfillment. Great success, and thank you for being a part. Make sure you hit the register, www.briods.com/register. Scan the link right here. Make sure that you sign up, you register, and you become a part of this as soon as possible and get in before somebody else so that you can get paid before they do at the end of the day. So if you have more questions, if you need more information, feel free to, go to the website and email us, get in contact with us, and we'll be sure to share the information with you and answer your questions as soon as possible. Again, my name is Avidon M. Respes. I appreciate you being a part of this, and I'll see you soon.